This is going to be one of the most important videos you will ever watch on trading because let me tell you this, you will never become a profitable trader without mastering risk management. And 90% of the people who lose money on the market don't use any risk management. So if you are losing money on the market, or if you ever felt like you were one wrong trade away from completely blowing your account, then you should watch this video till the end because today I'm going to show you everything you need to know about risk management and how you can use it to stop lose money on the market and finally become a profitable trader. And so guys, before getting started, make sure to subscribe to my channel, like this video, and let's dive straight into the content. There are three concepts that you need to understand in order to master risk management. And the first one is risk tolerance. Risk tolerance is the amount of money that you are willing to risk in one single trade. And that depends on your personal risk profile and on your trading account size. And let me show you some examples to make you understand why it is important to identify your risk tolerance. And let's say that you have a $10,000 trading account and you make 3 trades where you lose $3,000 per trade. You basically burn 90% of your trading account in only 3 trades and the game is over because now you only have $1,000 left in your trading account and you would have to make 1000% profit in order to come back to your initial state, which is basically impossible. So that's why traders usually keep their risk tolerance at maximum 1 to 5% of their trading account. And so that means that traders, professional traders, are only willing to risk 1 to maximum 5% of their trading account in one single trade. So once you set your risk tolerance, which you would have to keep at around 2% maximum if you are a beginner, the second concept to understand in order to master risk management is the stop loss. And the stop loss allows you to set the exit price level at which to exit your trade in case the price starts moving in the opposite direction than what you are expecting. And so you always have to set your stop loss at a safe price level, which means below a strong support if you are longing or above a strong resistance if you are shorting. And let me show you an example on my laptop to make you understand this concept better. This is the Bitcoin price chart, and as you can see, we formed this uptrend and we're getting supported by this yellow trend line, and every time we touched that line, we then saw a bounce. And so if we want to enter a long position once we touch that line again, it would make sense to set a stop loss below that trend line. And that's because if we break that support level, a downtrend is going to start, and so it wouldn't make sense to hold that long position because that would lead to bigger losses. And as you can see here, the $25,000 level, it's also a big support level for Bitcoin, and so it would make sense to place the stop loss below that level too, because if we reach the $25,000, we may get a bounce there. So we want to be sure that our stop loss level is below every important support that we can see on the charts. So now that you know your risk tolerance and you know how to set your stop loss, how do you make sure that you will always lose maximum 2% on every trade? I'm going to show you a simple formula that will allow you to calculate your position size in a way that you will never lose more than your risk tolerance on every trade. And guys, the position size is the third concept that you need to understand in order to master risk management, and it simply is the amount of money that you use for one trade. And I'm going to show you this concept again on my laptop. Let's say your risk tolerance is 2% and your trading account size is $5,000. Then the maximum amount of money that you are willing to lose in one trade is equal to 2% times $5,000, which is equal to $100. And in order to calculate your position size, you need to take your risk tolerance, which is $100, and divide this amount by the following equation, which is entry price minus stop loss price divided by entry price times the amount of leverage that you are using in this trade. And this equation will give you the position size. Let's now apply this equation to our example trade. And so our entry price would be at 26,774 US dollars. So 26,774 minus our stop loss price, which is 24,835 US dollars. 24,835 divided by the entry price again, so 26,774 US dollars. This needs to be multiplied by the amount of leverage that we are using, and let's say 10x leverage, for example. Here we write 100, and we will divide 100 US dollars by the result of this equation. And so this way, our position size, so the amount of money that we will use for this trade in order to lose maximum 2% of our trading account, or 100 US dollars. And so this amount, our position size, would be equal to 100 US dollars divided by 0.72, which is the result of this equation. And ultimately, the position size would be equal to 138.88 US dollars. And so your trade size, so the amount of money that you will use for this trade, will be 140 US dollars, more or less, which would allow you to take a maximum loss of 2% in case the price moves in the opposite direction than what you expect. So now you have all the tools that will allow you to use risk management in your trading, and believe me, this will take your trading to the next level. And all you have to do is set your risk tolerance at around 2%, identify a safe stop loss level before entering any trade, and then apply the formula that I showed you earlier to calculate the position size. And these 3 simple steps will allow you to avoid big losses and ultimately save your trading account. So if you got some value out of this video, then like it so that more people can watch it, and subscribe to my channel if you want to learn more about trading. And if you didn't watch my video where I explain you how to trade the ascending triangle chart pattern, you can watch it right there. And guys, see you in the next video.